Hey traders, Michael or 𝐿𝑰𝐴 here. You're here for another episode of Common Sense Market Analysis. Today is Monday, October 6, 2025. You're looking at a daily chart of the SPY or Spiders, which is the proxy for the S&P 500. What do we have on the docket today? Well, we got a lot of interesting things to talk about. Let's go over the longer term perspective first. Today we're up 0.36%, we're up $2.40, and we're a stone's throw away from making new all-time highs. Again, the main question that everyone's asking is when are we due for a turn? And yes, I do think we're definitely due for a turn. Let's get this out of the way. Nothing moves in a linear line. The market goes up and the market goes down. Market goes up and down. Same thing for life. Some days you're going to feel like you're on top of the world, and other days you're going to have some challenges that are going to set you back. Same rules apply. Nothing moves in a linear line. There will be a pullback. The main question is when. We are coming into some big time numbers. One of them is already on the chart. That is a big fat semi-round number at 675. And then we also have some other numbers in uncharted territory that obviously Inside the Numbers and Live Room members will have ready at their disposal. Another number / area up above that can be a sticking point for the market is at 690 to 700. 690 because we've been talking about the importance of the numbers 3, 6, and 9. Whether you want to believe it, you can. If not, whatever. But those numbers are certainly important. We see it today actually as we're up 0.36%. No accidents or coincidences. And then obviously another number up above is at 700. That is a big time, big fat round number. Okay, these round numbers we've seen over and over and over again are very, very important. And generally speaking, they're magnetic to the market, and the market will often have a reaction at that number. We saw it in SMH the other day. On Thursday, we made a high of 340 on the dot. And then we had a small little pullback. It wasn't by much, but the point is that these numbers are important and magnetic. We still have this government shutdown shenanigans going on. You type in government shutdown update on Google, and you'll receive about 20 different articles saying 20 different things. Okay, it's all shenanigans, it's all noise to distract you from what's going on. I don't really pay too much attention about it. If you want to, you can. I'm not saying you have to totally disregard it. I just think it's noise in my ear that I try to avoid. That's all it is, take it at face value. But something worth noting is that with all this government shutdown shenanigans going on, it doesn't really seem to be having an effect at all on the market, as we're still making new all-time highs, and we're now a stone's throw away of making a new all-time high. I do have a number that you guys should write down on a sticky note, and that number is at 66318 in green. And yes, it is in green because I'm using this as another pivot number, a medium / longer term pivot number. It's this breakup candle low. Also, it happens to coincide right with the 20 period moving average. It's an important mathematical number that I worked out. Just so happens that it coincides with this breakup candle low, the 20 period moving average, essentially building out the full stack. We talk about that in my little tidbit later on. It's definitely worth a watch. We're going to jump around a bit and take a look at my number one favorite market leading indicator, CAMP IWM. We're up 0.40% today, up about $1. And if you guys watched the previous videos, you know that this zone right here was an overhead resistance zone where the market shouldn't just waltz right through, which we saw exactly that. I gave you a few options as to what would happen because we did have a first time best time situation. Coming up short of the first number, that does constitute as a first time best time situation. So the second time around, we're either looking for a spike of the number or we wait for it to get to the back end of the overhead resistance zone. One of the options that we always discuss is to spike the high and rip it right back down in the other direction. That was certainly a possibility that we put on the board. Spiked the back end number by just a touch and then ripped it right back down. And now we're starting to close candles below the back end number, the previous all-time high. The more candlesticks, especially on a daily chart where the larger time frames are always going to be more dominant compared to the smaller ones, if we continue to close candles below, This zone, we already started to close candles below the back end number. She's going to want to eventually make her way to fill this gap right here that is unfinished business, and then possibly even head to the 20 period moving average, that being home base. What else do we have down here? Well, we got this breakup candle low that happens to be in the vicinity of the 20 period moving average, but that's only if we start closing candles below this overhead resistance zone. But that's not to mention that we are in a very bullish type of tape. We're in a bullish tape in my number one favorite market leading indicator, in the spiders, in the Qs, pretty much all around the board. When is it going to end? Well, we don't really know yet. Price can keep going up until she doesn't want to anymore. We're in a very weird type of tape right now where we're just constantly grinding up higher with barely any pullbacks. Everything is being controlled by the big time players like Nvidia, and there's a lot of stuff that's overvalued right now. I do have some important dates in mind where the market can take a turn, but I don't really want to be spewing out dates right now just because I want to do a little bit more work on it. I want to do a little bit more cycle analysis of it and get some exact stuff for you rather than just throwing it out there. But again, the other side to it is that we're in a very, very stupidly strong market. Above all the moving averages all across the board, above all the medium/longer term pivots that we mentioned, and it really seems like the market's never going to stop, but it will. Nothing moves in a linear line. There's going to be ups and there's going to be downs. We will get a sign and or signal of a trend change. It's just a matter of when. If we start to close candles above this back end number of the overhead resistance zone, then she could just continue to grind up higher. We have an important number up above, a big fat round number, magnetic number at 250. That's a milestone number for Camp IWM. That's 1/4 of 1,000. 1,000 is known as a millennium if you're comparing it to years. So that certainly is going to be an important spot for the market, my number one favorite market leading indicator. Speaking of 250, next year on July 4th, 2026, marks the 250th anniversary of the United States, and that will certainly be an important date. We're nowhere near it yet, and we have no idea where the market will be during that time, but it will certainly be important. Just throwing that out there. Alright, let's switch gears and take a look at the shorter term perspective of the spiders, starting with inside the numbers. We're taking a look at the 0 dark 30 notes. These are the morning notes that are posted well before the opening bell, so that you're ready with the game plan and the numbers for that day. So let's go over some important numbers from the intraday activity, starting with the morning pivot at 670.35. You know the drill, closing candles above, she's bullish, and closing candles below, she's bearish. Some other numbers that you need to take note of is the first overhead resistance zone at 671.75 to 672.45. And then we had Friday's gap that you'll see on the board in a moment. That was a target towards the downside. And then we had the first support zone, which we never reached. To the right of the vertical line is today's activity. All the numbers are put on the board. In green, we got the morning pivot. The red lines represents the overhead resistance. We got Friday's gap, that's this dashed line right here. And then the support zone down below, which we never reached. So starting with the morning pivot, as you can see, we spiked it by a decent amount, but this was our initial support area. She did provide the bare minimum base hit if traders took it. We came up short the first time around, right here, so that does constitute as a first time, best time situation. Came up short the first time, so that means the second time around, this candle right here, we're either looking for a spike of the pivot, or some more conservative traders could have waited for the gap down below right here, in which we did come up short of. We'll get to that in a second. But price did spike the pivot, provided some support, and then we eventually started to close candles below and made a test or an attempt of the gap right here. Came up short, we missed it, and then fought our way right back to the pivot. So we did get some initial bullish signs by coming up short of the gap, fighting our way back towards the pivot in this area, and started to close candles above it. Notice how we never had a candle close below the pivot once we got back above it. We spiked it by a bit right here, we nailed it on the dot right here, but we never closed candles below it. So that was a bullish sign. Traders could have went long at the pivot and rode it up all the way to our first overhead resistance number. Right here was the first zone of overhead resistance, and as you can see, it worked out pretty well. As you can see, the first time around of the front end number of the zone, and then she bounced right in the other direction. Came up again, bounced away. came up again, bounced away. You can see the importance of these numbers. The numbers work. And then we started to get above it, started to use this number as support on the way back down. Never quite made it on the dot, but we did close candles above it, making our way up towards the back end number at 672.45. Pretty much nailed it right on the frickin' dot, and then pulled back. Nailed it again on the dot, and then pulled back. Where to? The front end number of the overhead resistance zone. These numbers can be used as overhead resistance towards the upside, obviously. That's why it's called an overhead resistance zone. But then on the way back down, they could be utilized as support, which is what we're currently seeing right now. If you couldn't already tell, the market is still open. It's about 3:40, so we got 20 minutes until the close. So you could see some live action right now, and we're using this number as support. They could play ping pong back and forth, eating some time off the clock for the remainder of the day. Or if we start to get below this number, the 671.75, and start to close candles below, then she's going to want to start to make her way back towards the pivot at 670.35. Doesn't have to get there all in one shot, but that does become the next target on the board. You could pause the video, read the notes, and go back to the chart to double check the work. If you're a day trader coming into the morning session without a game plan, without the numbers, and you're pretty much just guessing and hoping throughout the entire day, then you need to come and give Inside the Numbers a shot. We provide you the full SPY game plan and the numbers so that you never have to guess anymore. It's all laid out for you. In addition, we have stocks on the move. Today we had one that was 𝐼ONQ. Unfortunately did not hit its entry target, but again, we prefer quality over quantity, high probability trade setups. And then in addition, you get a list of 13 different markets with support and resistance numbers. We have the Qs, IWM, SMH, Tesla, gold, crude, silver, natural gas, Bitcoin, the dollar. We have an opportunity around the corner for everybody. If you're not interested in trading the spiders, then we got the Qs for you. If you're not interested in the Qs, we got commodities for you. We got Tesla. We got SMH. We have something for everybody. That's Inside the Numbers / the live room. And guess what? If you purchase the live room, you get Inside the Numbers for free. Alright, so the stock that we're going to look at today and do some technical analysis on is MU, Micron Technology. So I'm starting on a weekly time frame to get the bigger picture perspective, and the first thing that jumps out at me is this big time breakup candle low. What else do I see? Well, if I zoom out a bit, we can see that this area right here is the most recent breakout area. It's right underneath the breakup candle low that we just put, but we could go ahead and put a line on it. That comes in at 157.54. Again, the whole process of what we're doing is building the full stack. Stacking reason upon reason upon reason as to why we should take this trade, making it a high probability trade setup. So what I'm going to do now is take a look at the 2-week chart. As you can see up here, you can see all the time frames that I use, and I use a variety of different time frames. I got a 2-day, 3-day, 4-day, a 2-week, 2-month. I have a whole bunch of different time frames, and the reason for that is simply because I want different perspectives. The more perspectives that you get on different time frames, the better understanding you can have of the overall picture as to what's going on. It's the same thing in life. Okay, a specific topic of discussion is always going to have multiple perspectives amongst different types of people. One person is going to think about this, the other person thinks about that, and so on. Well, it's pretty much the same thing. So if I'm talking to my friends about a specific topic or discussion, I always want to get as many different perspectives as possible so that I don't fall into the trap of confirmation bias or any type of bias in that matter. You need to get both sides of the story. Same rules apply to the stock market. Okay, if we're only getting one perspective, let's say on the hourly time frame, how do we know what's going on the larger time frames? You could easily fall into the trap of getting a false sense of what's happening on the smaller time frames if you don't take a look at the larger ones. And that answers the question as to why I have all of these different time frames on the board, such as the 2-week one, which we're looking at right now. And it just so happens that there's a gap right here at 157.54 where we just drew the line that coincides right with the breakout area. That's another reason added to the full stack. What about on a 2-day chart? Same thing. You have this gap right here. You have a breakup candle low, a big one in fact, all coinciding with the most recent breakout area. Let's jump over to the daily chart and try to find some more stuff. Well, right here we have another breakup candle low. That's at 165.60. Almost a big fat semi-round number, and I forgot to mention that the first line that we drew at 160 is indeed a big fat round number, which can be added to the full stack. We all know, and we've seen it firsthand, that the big fat round numbers do work. We saw it firsthand in SMH a few days ago. On Thursday, we made a high of exactly 340 and then pulled away. So you can see just from the technical analysis that we've been doing, trying to create the full stack, what we've really been doing is creating a zone of support. We have 3 numbers on the board that can pretty much be a zone of support. Let's put some moving averages on the board just for fun, and we could see that the 20-period moving average falls in line right with this zone. And as we know, markets don't like to be too extended from home base. MU has been extended from home base. So that's another piece of the puzzle to the full stack. Just some other things that I see on the chart just for your benefit is that there's another gap right here at 150.57. Again, almost another big fat round number at 150. And then right at the low is the entrance to no man's land. That is going to be a bull-bear battle. And then if we start to close candles below, then that opens the door to this obvious gap right here and then another one right below. I'm just going through the process of what's going on in my head when I look at different time frames, getting different perspectives, and trying to build the full stack setup. We don't look for only one reason. We try to stack up as many reasons as possible, giving us a high probability trade setup. This is all talked about in the MSF Masterclass course in very great detail by my dad. And as an additional gift, if you purchase the MSF Masterclass, you get the magic calculator for free, for life. I just did a little bit of work for fun, put the pivot high of MU that happened to be at 201, and it shot out some support numbers. So let's put a few on the board and see where they land. So I put all the corresponding magic calculator numbers on the board in yellow, and as you can see, they're fairly close to the blue support numbers that we previously just put. It's another tool in our toolbox to give us the extra bit of certainty and confidence when getting into a trade. These magic calculator numbers work wonders. One of the most underrated tools that we have in my strategic forecast. Alright, let's take a quick trip around the world and take a look at some of the other markets, starting with my second favorite market leading indicator, the transportation department. Now, we've been trading around the pivot number for quite some time now, pretty much during this entire period, staying within this triangle, pretty much testing the pivot, the green line, every single day. But now, on Friday and today, we're starting to close above the downward trend line. It's about time the transportation department wanted to make a move somewhere. Staying above and closing candles above that trend line is the bull case scenario. But, capital B-U-T, we have to keep in mind that the market's number one job is to trick, trap, fool, and frustrate as many traders as possible, the most amount of times as possible. So although we are closing candles above and staying above, which is the bull case scenario, that doesn't mean she can't go back for another test of the pivot like she did today. We almost got there. Today's low was 15,691 against our pivot number at 15,650. So the pivot certainly isn't out of the question yet, and price can come back and do a little whip around action. So we always have to keep that in the back of our mind. It's the market's job. It's its duty to frustrate us, to trick us, to trap us. But just taking it at face value and looking at it in a technical analysis perspective, we're above all the moving averages. We're closing candles above this trend line that we've had on the board for a while now. That is the bull case scenario. By the way, take a look at where the market found resistance at. This big time breakdown candle high. Probably the biggest one on the screen that we see. It wasn't the exact high, it's around the vicinity of the high, but that was indeed important overhead resistance. Even though the market already found resistance right here, broke above it right here, that area can still be utilized again, as we saw today and Friday. What about the Q people? She's up 0.75%, up about $4.53, and we're making new all-time highs. The high today was 609.36. Again, the 369 numbers will give that a funny how that works. We're above all the moving averages, obviously, so the trend is your friend, and we're still grinding up. In the spiders, we had a doji candle formation. In the Qs, we do not. In the spiders, we did not make a new all-time high. On Friday we did, but today we did not. And in the Qs, we did make a new all-time high. Just so happens it's at those 369 numbers. I do have some numbers up above in uncharted territory for the Qs. Inside the numbers and live room members will have those numbers. But on the downside, here's some obvious points. We have this big time breakup candle low that happens to coincide around the vicinity of the 20 period moving average. That is pretty close to the pivot number we mentioned in the spiders. That is certainly going to be an important area since we haven't really touched the 20 period moving average in quite some time. The last time we touched it was at the beginning of September, about a month ago. Just look how stupidly extended we are in SMH. Way extended from home base, just grinding up higher, gapping up, making new all-time highs, and this is just ridiculously strong. But there will be a pullback. Nothing moves, especially in the market, in a linear line. Taking a quick look at the weekly chart, I mean, just looking at it, this thing is on a tear. Well extended from home base. We got 1, 2, 3, 4, 5 weeks in a row of just consistent green weekly candles making new all-time highs every single week. This week isn't finished yet, so will we continue the pattern or will we break the chain? Not really that much to go over in SMH, but I will give you some important destinations. Here are some obvious ones. First, we have this gap right here at 336.68. That's the exact close and the gap number, 1 penny off from 336.69. We'll give that a funny how that works. So you got that gap right there. You have another gap down below at 333.69. Again, funny how that works. I'm telling you, these numbers are important. Also, SMH can use this breakdown candle high as support on the way back down before getting to the gap. If we miss the gap and find support at that area, then we know that we're in a very bullish tape. We already are in one, but that just shows even more bullish behavior. We are approaching a big fat round number at 350. That is going to be a key target. We came up a little bit short. We made a high of 348.53, but that is the next main destination. With that said, we're going to pull the ripcord for today. Thank you all so much for tuning in for another episode of Common Sense Market Analysis. Don't forget to like, comment, subscribe, all that good stuff as it helps me and the channel out a lot. We're going to call it there. Again, thank you all so much for tuning in. I'm 𝐼𝐸. We'll be back in uniform, ready to go for tomorrow's morning session and the video later that night. I hope each and every one of you has a great rest of your day. Stay safe and take care now, folks.